Okay, so before I start this video, I just want to say I am not a Democrat. I am not a Republican. I'm not a libertarian. I'm not in anything. I hate all political parties equally. Now that we got that out of the way, I want to talk a bit about this very political, contentious matter, which is the debt limit, which is Republicans and Democrats at each other's throats once again about what we need to do regarding government spending. And generally, there's a lot of posturing that happens around these times and a lot of just bad faith arguments on both sides. And at the bottom and at the very core of it, you have to think about what the bottom line is for most entities or people. And when it comes to politicians specifically, what is their bottom line? Is their bottom line the health and solvency of the country that they're serving? You could say, that could be secondary, that could be tertiary, but what is their primary bottom line? And I would say, now this just maybe comes from my cynical view, I'd say their primary bottom line is to continue being reelected. I don't think that's too controversial, but maybe some of you guys who are, hardcore Democrats or Republicans may argue with that. But in my view, I think most people, when it comes to altruism, it still can be tied back to selfish motives. But that's near here nor there. That's a philosophical argument. When we're looking at the debt limit, government funding and spending, the thing that I want to do here is basically make this very simple. And many people are saying, well, do we have enough money to spend? Should we be spending this money? A quick and dirty way to look at this is using this right here, which is a formula for current accounts. Now you may say, what exactly is a current account? Now let's scroll all the way up here and give you a quick definition. What is current account? The current account records a nation's transactions with the rest of the world, specifically its net trade in goods and services, its net earnings on cross-border investments, and its net transfer payments over a defined period, such as a year or a quarter, so on and so forth. And honestly, this is pretty much what it is. Savings minus investment. And you can basically break down savings in two buckets. It could be domestic savings and it can be foreign savings. Now, the quick way to look at this is when savings is greater than investments. So the investments, think of that as spending, the public spending. When your savings is greater than your spending, then your current account is greater than zero, and net foreign investment and financial capital outflows for the domestic economy are positive. So you have a bit of a surplus going on. Now, when savings are less than investment, then you could say, okay, we're running a bit of a deficit here. Now, here, there are some other variables you can throw in here. Now, for those of you who are wondering, well, when it comes to spending, can we justify spending if we spend on something that will actually be productive to GDP? Now, relating this back to your own life, you may say, well, how can you take on debt and have it related to, increasing your net worth? Well, many of you actually probably engage in this, and this is called a mortgage. You take on debt and you live in a home, and then when you pay off your debt, you're actually giving yourself equity and you're increasing your net worth. That's essentially a microcosm of what could happen with a government if they use that debt wisely. Now, the question is, are they using the debt wisely? So let's go down and take a look at what exactly is going on here. So the Senate is scheduled to vote on Monday, which is today, on the House-passed government funding bill, but its fate remains uncertain, with Republicans threatening to block the measure. Lawmakers have until Friday to approve funding for the government, or a shutdown will be triggered. The sticking point is the inclusion of a debt ceiling increase in the funding bill, which Republicans say they are unwilling to support and are demanding that Democrats take the political heat for the increase. Now, here's the thing. We all know, many of you here are even older than me. And you know that when it comes to raising the debt limit, there's a lot of political posturing. But at the end of the day, whether it's a Republican administration or a Democratic administration, that debt limit is going to get raised by hook or by crook. Let's continue. The Treasury Department has said the debt limit will be breached sometime in October if it's not lifted, which could disrupt the U.S. economy. The accumulated debt that necessitated raising the limit hasn't been amassed by a single party, but Republicans are tying the increase to the Democrats' plan to authorize trillions of dollars in spending on social safety net programs. So this is the meat of the matter here, or one of them. I'm going to show you another one. Are social safety net programs going to be a net positive for the economy? Now, some may say, no, there's no way. It will just, it's not going to add to GDP. It's just going to be a waste of money. And then some may say, well, hey, these are our workers. And, with an economy, the households, if they are insolvent, that means it's going to impact our GDP to the downside. So there's an argument on either or. I'm not going to tell you what to think. Now let's scroll down here. There's another thing that's happening right now, which is at the same time, the House is expected to vote Thursday on an infrastructure bill that progressive Democrats have threatened to block to maximize their leverage over a certain multi-trillion-dollar package. The vote had originally been scheduled for Monday. So this is another one. So you might say, and I don't really think there are too many arguments against this, but then you might say, well, spending on infrastructure, will that be a positive to GDP growth? And some may say, well, hey, we're taking out, we have a little bit of debt, when it comes to spending, maybe we can spend on this and this will actually be a positive for our GDP in the long run. So let's take on this debt, or let's take on this deficit. So I don't really know too many arguments against that, but some may just say, hey, we just don't want to spend. And that could be an argument against it. But this is a very quick and dirty way to look at this. So you may say, well, are U.S. domestic savings strong enough to cover this investment to keep us above? Obviously, we're in a deficit, so the answer is no. Then you would say, are foreign investments enough to, in addition to domestic investments, enough to keep us above? Are foreign savings and domestic savings enough to keep us to cover our investments? We're in a deficit, so the answer is no. So what we need to do is figure out a way to lessen that deficit. And you want to know a quick and dirty way how the Federal Reserve plays a role in this. Well, check it out. I think I might have actually gone down too far, but here it is. Actually, let me scroll down a bit more, because this is actually very important to take note of. I believe it is the foreign exchange rate. And okay, long story short, because I can't find it here and I don't want to waste too much of your time. Long story short, if a country is able to depreciate its currency, then it can actually lessen the deficit, because what they're essentially doing is saying, well, if we devalue our currency a little bit against other currencies, that means that, yes, imports become a little bit more expensive, but our exports will actually become less expensive to other countries who want to buy it. So then we can actually start taking in some income. So that's one quick trick that a lot of countries like to use in order to lessen deficits. So that could be something that the United States might want to pull out of its hat. And obviously we're having inflation right now. So, maybe that's something that's being considered with the devaluation of the US dollar. But at the end of the day, when it comes to government spending, just know that it is a balance between savings, domestic and foreign, and the spending, which is the investment, which the combination of the two equals the current account. So I definitely recommend you guys look up current accounts, and you can find it on Investopedia. Just do some quick reading. I think it'll help you out. And especially when it comes to these political things, because honestly, when you understand what kind of is going on behind the scenes, you realize that it's just a lot of political posturing, and their bottom line is to get reelected, not really caring about the long-term solvency of a country. They really just care about, am I going to get elected? And then secondarily and tertiary, and, in the tertiary, they might say, well, hey, maybe this decision will also benefit the country. So let me know what you think about this in the comment section below.